Okay, folks, welcome to this week's review from Magnetic Trading. Last week we had one official trade on our trading, which we shared with our clients. We're actually long on the FTSE. We're long from 65.35. We're looking for a target up at 6,900 in the coming months. So that trade is now on. In terms of analysis, really, whilst above 6,400, we're expecting this move up to 6,900. So we're using our analysis on the market to get involved with that one. DAX as well. We've actually just bought this for our clients on our advisor program, sending alerts out to buy around the 13,200 level, or just below that level. Again, we're targeting up towards 13,500 whilst we hold end of day closes above 13,200. So that's the DAX. All right, what we're going to do this week is we're going to hand you over to Cameron. He's going to give you an update on the DAX first of the month trade, which we've actually taught many times on these weekly sessions. So let's go and see how that trade has been faring.
Okay, so I'm going to go over the DAX first of the month trade for December, but for the purpose of the people that haven't been trading the DAX first of the month trade with us that we've taught on previous presentations, I'm going to go over the rules and the methodology behind the trade. So this trade has performed a little under 10% return over the last 4 years for really only trading for about 10 minutes a month, and it really piggybacks on the institutes pumping pension money into the markets on the first trading day of the month. And it really is, regardless, no matter if the market is going up in the short or midterm or down in the short or midterm, that money will generally be introduced into the market. So here's the trading rules. What we want to do is we want to buy the market so we can ride on the back of that institutional money coming into the market. So we're going to buy the market just before 10 p.m. German time on the day before the first of the month. So if the first trading day of the month is a Tuesday, then we would buy on the Monday night. Okay, so buying on the Monday night in the expectation that the market will rise on the Monday. So that is for any first of the month, which is between Monday and Thursday. Okay, and if you are not in Germany, like most of us, then just use a Google calculator of time of the city that you're in and what the local time is in Germany, and it'll tell you exactly what time that is for you. So if the first trend of the month is Monday, we want to buy during the Friday session, and we're going to enter the market at midnight German time, which is the Globex open for the first trading day of the month. So that is if we are before a weekend or a holiday in the market. So if there's a holiday, Monday to Thursday, again, just Google what the DAX holidays are and you will see them for the whole year. So if the first trading day of the month is a Monday or it's a holiday, we're going to enter from the Globex open, which is midnight. Now, we are not going to do anything with the trade. We're just going to leave the trade till the following day, till noon German time the following day. And we generally risk 1%, 2% on this trade. We actually risk 1%, but you can risk 2% on this trade depending on your account size. And you're going to use a stop loss of 40 points from your entry. And there is no hard limit. There is no hard target at all. You're purely going to leave this trade on until midday German time the next day. And at that time, we're going to close the trade. So now let's look at what happened this month with the DAX trade. Okay, so here is a chart of the DAX. It's actually a half-hour chart. It doesn't really matter what time frame you use. But for this example, we use the half hour. And here is the last traded candle for the DAX. So this is where you're going to buy the market. So we just have a look at the close of this candle. So this is just before 10 p.m. I appreciate on the chart there it's after 10 p.m. but this chart is on a different time zone, which is actually 1 hour ahead. So this being a half-hour candle, on this chart we're going to buy just before 11, which is 10 p.m. local time for Germany. So close of this candle was just at 13,272. So I've just put in that we bought at 73, just before the market closed. And by just before the market, I really do mean just before the market, really within the last 30 seconds of the market. Don't buy it 5 minutes before. It's just really in the last minute that you want to buy. You're going to place a 40-point stop. So we've got our stop down here at 13,233. And then what are we going to do? We're going to do nothing. We're just going to leave the trade on until the following day, till noon German time, which is actually right over here. So this chart being an hour ahead, which is here, sorry, it's going to be this candle. This candle is going to close at 1 o'clock on the chart, and the local time is going to be midday German time. So that candle closed at 13,000. Get it back there, 13,427. So we've entered the market, we've done nothing, we've left it till the next day, we've got a 40-point stop, and we've achieved a 154-point return on the trade. So it's a 3.85 multiplier. So if you risked 1% on the trade, it would have made 3.85%. So not bad for just placing a trade and leaving it overnight. Don't try and time this trade in the sense of where to get in or out. Over the years, we've just found that the midday time slot to come out of the trade is the optimum time to come out of the trade. And it certainly worked very well in this example, pretty much on the highs of the day. So a really nice, simple and easy trade to do. If you've not got a lot of time to trade, you can just place this trade once a month. It's only going to take you 10 minutes and no real skill needed. You're just going to place the trade and leave it to play out. So hopefully that was helpful for you guys, and we look forward to seeing your results on this trade moving forward.